Hi, I'm Mark and welcome to Little Known Stocks, the show where I try to prove that being boring and doing your research will make you money. Now today I'm talking about Elys Game Technology. Elys Game Technology are an interesting company. They've existed as a company for many years in Italy, a couple of decades, and they were part of a traditional retail gambling experience. So lots of shops, or a few shops, retail locations. And then in the 2010s, so I believe 2015, they started online gambling in a reasonable manner, but they were using other people's platforms. And then in 2018, they decided that they were going to develop their own platform. And so they saw quite a big spike in revenue as a result of that. They had their own platform up and running. They became very successful, and really more and more online gambling became their mainstream, particularly during the pandemic. And during the pandemic, actually, I'll show you in a minute, they saw revenue spike massively for the online gambling space. Now, what are they doing now? Well, they've broadened their technology into a number of different avenues, and they are branching out into things like virtual betting, so betting on events that don't really happen but just happen virtually. If you look at these pictures here and these images, I couldn't tell you that wasn't real. Actually, it's quite sophisticated looking technology. They operate a end-to-end sports betting solution, so they have their software, but also they provide terminals and they provide a end-to-end solution, so for sports bars, etc. And really what they're trying to do at the moment is they're trying to take all of these solutions and basically operate in the US, so shifting from Italy to the US, which is going to be a big mammoth task, but the opportunity is potentially huge. Before I go any further in the video, I always forget at the beginning to ask people to like, so if you could give a like, it really helps me out with the YouTube algorithm. And the reason why the opportunity is potentially huge is because sports betting in particular has been illegal in the US forever. But recently there was a piece of legislation called PASPA, which means that it's unconstitutional for it to be illegal at a federal level. So each state now has the option to make sports gambling legal. And obviously this raises a lot of capital for the states. You can see from Elys Game Technologies' own view, they've listed the states that are already going live here, but they believe in the coming years that many more states will follow suit. So I've seen a number of different sources, and obviously it's in NJ Games, who are the reports that I'm using here. It's in their interest to report a sizable figure, but they're reporting that direct labour income is 4 billion, 7 billion indirect, so 11 billion total. Over 200,000 jobs created and 22.4 billion in GDP added to the US, which would be very substantial. So there's a lot of incentive for these states to be opening up to sports betting in particular. So if we think about Elys Game Technology and the size of their business at the moment, coming from Italy, as I said, they've got a historic business in Italy. Their market cap is just $110 million. So really, when you're thinking about the size of the total addressable market, there is a big opportunity here. And although there'll be a lot of competition, their small market cap, they could easily double, triple, quadruple, depending on how successful the legalization is and how many clients they're able to pick up going through this process and how successfully they can float in the US. So when we think about their history and their growth, they've had very steady and strong growth over the past few years, but with some interruption, which I'll get into. So 2016, firstly, actually, total turnover is the number of wagers placed. So that's not their revenue. Total revenue is this second number here. So they're very different numbers, you'll notice. And they do mention that the hold, or basically the bet that they take as revenue, is between 10 and 20% for sports betting in particular, but varies across the different gambling areas that they operate in. So roulette, poker, sports betting, horse and dog racing, etc. They all have various different holds. So total turnover has been growing though. So 121 million in 2016, that doubled in 2017, pretty much doubled again in 2018, and stayed pretty flat in 2019. Now in 2020, that saw a sharp decline but revenue did not decline as much as the total turnover. Now, they give two reasons for that, very, very understandable. The first one is that their retail stores were closed because of COVID, and the second is they are a sports betting business and there was no sports. So really, the fact that they survived and really didn't take a massive hit as a loss is really remarkable. And I think the results that we can see here are quite encouraging given that difficult market. Now, if we look at their balance sheet for the first quarter, they actually made 14 million in revenue just for the first quarter of 2021. If we go back and look at what that is versus 2020, they've basically made about 60% of their revenue for 2020 already in just the first quarter of 2021. So I have no concern that their growth is going to continue. But we are talking pretty much exclusively about Italian numbers here at the moment. And really the US market opportunity hasn't opened up. They are focused much more on e-business now. So the retail stores don't feature in their forward-looking plans. They still retain them in Italy, but they won't be a big part of the growth of the business moving forward, which is good because it's a less profitable area of the business. They're very much swinging to other areas, which I'll talk about in a second. Now, in terms of actual profitability, their earnings per share in 2018 were minus 32 cents. That worsened significantly in 2019, and they lost 91 cents a share. But then it actually improved in 2020, despite the top line loss, and they only lost 71 cents a share. Still bad, given their share price especially, but certainly a big improvement. And that really reflects the closure of those retail locations. So a lot of their cost was tied up in those retail locations. The other thing is they've been spending aggressively to build these new platforms. They're really spending a lot of money, and that's now in place. The infrastructure is in place for their business going forward. So they should be much more profitable based on the use of this infrastructure. And they do say it's a very, very scalable business once it's developed. Now, if we look at Q1 2021, although it's still a loss, they're only losing 3 cents per share, which is a dramatic improvement over previous years. And that's impressive given the fact that they're still setting up this US business. They'll have to be investing a lot of money to do so. And not only that, but their cash position has increased substantially. So they've gone from 18 million in cash last year to 21.5 million in cash, which is basically 20% of their total market cap. So quite impressive to see that cash amount, and with the scaling of the business as well, to retain that much cash will put them in good stead going forward, although they will have to expend a lot more to get set up in the US, and they may need to raise more capital in the near future if the opportunity is big enough. So let's talk about the US and what the specific opportunity is for Elys Gaming. So one of the things I really like about them actually is they know they've got a limited amount of cash. They're going to deploy it in the most sensible way possible. So they talked about selecting specific states that make sense and don't currently have a lot of competition within them. And the first state that they're really moving out in a big way is Washington, D.C. So they are awaiting a license for D.C. It was applied for in December 2020, and they mentioned that it takes 4 to 6 months. So the news hasn't come out that license has been approved yet. Maybe it's delayed with COVID, but I'm really expecting some news any day. And with that news that they'll be approved in DC, I would expect a sharp increase in their share price at that time. Should it happen, it could be that they don't get the license, and that's a big risk to the downside. But let's hope, and this is really a big pivotal moment for the company going forward. So they'll be looking for a $30 to $40 million steady state market size with 7 to 15% market share within DC, which is substantial. I think that's quite an aspirational target. They'll be targeting 2 markets. One is a full solution for casinos, so their sports betting computers and programs in casinos. And the second one is sports bars, and they've just set up a sports bar ready to go for clients to come in and look and view the technology within a localized setting within Washington, D.C. as well. So that's their first real project and their first toe in the water. So if we look at their goals and milestones across the next few months and years, and they plan to establish their first regulated Class B sportsbook locations in the District of Columbia. They want to continue to grow in Italy, which is really important. as well as the US. They're not just moving to the US, they're going to continue to grow their Italian base. And actually, based on some of the fundamentals and some of the revenue, that may grow to be big enough to justify their current market cap in time anyway, which limits our risk in a market that they're already known for and operating in and know well. But not only that, but they also want to expand both the B2B and the B2C platforms through additional regulated European markets. So really important, they have the B2C platforms in Italy at the moment, and they can roll that out across the European markets. Good. So if we actually take a look at their business model, it is really, really unique, I think. And I haven't found another company that's doing this yet, although I'm sure they will pop up as sports betting operates on a larger scale in the US. And so they've got the front end, so they're engaging with the customer and the player through the terminal that I've just showed you. They have digital and land-based offerings. So there's a mobile app, there's an online platform, there's the terminals. You've got different types of content. So you've not only got sports betting, but you have poker, you have roulette, you have these virtual sports, the greyhound racing that I showed you earlier on. Then they've got the back office, so they've got the management, they've got the service, so the helplines, etc., are all managed by them. They've got the interface, so they're taking payment. They're managing all the web connections, the servers, etc. So really, if you're a business, you just receive their product, you plug it in, and you take profit. And that's a really, really strong business model, and something that I think could be very, very successful if you're operating on a B2B type model. Now, one thing that is slightly concerning is their gross margins. So comparably to some other businesses, they are quite slim. They're operating at 6.5% currently. They do plan to grow that over the next 3 to 5 years up to 18%, which is still quite narrow. But then if you look actually their operating margin, they expect their operating margin to be 16 to 18%. So actually pretty good in terms of the gross to net there. And they're operating, if they scale their business, a very, very profitable business. So could be good, but there's little room for margin, particularly at the moment. And the next 1 to 2 years needs to step up in terms of their gross margin growing significantly. So the one thing that really worries me is the competition. Doing a simple Google search of sports betting B2B US, came up here. They're talking about the same thing, the big opportunity in the US market. IGT here, they're already in 16 states and 40 locations. We've got this company here, Bet B2B, which don't advertise in the US, but just looking down, they're basically in every other market going somewhere. I'm sure they soon will be in the US. And the big one, DraftKings, they're looking at B2B as well. So there will be a lot of competition in this space. But I do like the strategy of focusing on Washington, DC to begin with, looking at another couple of states, and really focusing on an area that you know is going to be low in competition. And the market is big enough for a lot of these players to make substantial gains. And based on the market cap that they've got at the moment, Elys don't need to make a big dent in that market. They just need to establish themselves, build a client base, and they'll grow from there. And there is a massive opportunity for them to really, really expand very, very rapidly from where they are at the moment. So if you are looking to invest in this space, then DraftKings is really your only other option for the US anyway. Market cap is over 200 times that of Elys Game. So you've really got to decide whether you want the absolute explosive possibility that could be, a 10x, 20x, 100x stock in Elys, but definitely more risk if they were to fail. Very, very big downside if they were to fail. It could be a stock that potentially drops 75% and just retains their Italian holdings, and they could lose a lot of money by overextending themselves in the US. Whereas DraftKings will still have very good growth based on this sports betting becoming more and more prevalent across the US, but it certainly won't be the size of opportunity of growth that Elys would experience over the next few years. So that's all I've got time for. I do think this is a massive potential upside, but there is a lot of speculation required on this front, so I wouldn't put a massive amount of money into this stock. But certainly I will be building a small position and looking forward to doing what they see over the next few years. Now, if you like this video, please give a like and subscribe. Otherwise, have a great day.